Welcome back to the Wall Street Podcast. Today we're doing a deep dive into the Wall Street Journal's August 12, 2025 edition. Our mission, as always, is to pull out the key insights for you on market shifts, corporate strategy, policy moves, basically what you need to know.
Okay, let's start at the markets then. U.S. stocks were down slightly today. S&P 500, NASDAQ, both off about 0.3%. The Dow maybe a bit more, 0.5%. Seems like some investor caution is setting in, perhaps digesting some of these policy changes we're seeing.
In gold.
Still sliding. That follows President Trump stating no tariffs on gold bars. But interestingly, municipal bonds are gaining some traction.
Oh, why is that?
Well, supply is rising steadily, and crucially, their tax benefits survive Trump's latest spending bill. So investors are finding them, more appealing right now.
Got it. Okay, shifting gears to business and policy. Seeing some big moves in strategic areas, right?
Definitely. Take Vulcan Elements. They're a startup in rare earth magnets and think drones, EVs, critical stuff. They just announced a $65 million funding round. The goal? Boost U.S. production, lessen reliance on China.
And that fits right in with the Pentagon taking a 15% stake in MP Materials, the critical minerals miner. It's not just business. It feels like a national security angle.
Exactly. It's a clear strategic alignment. And speaking of EVs, Ford's making waves too.
Right. The new low-cost EV models, they're overhauling their Louisville factory for it.
That's the plan. A $2 billion overhaul. It positions them squarely against Chinese EV makers like BYD. But at the same time, there's a snag on the supply side. CATL, the world's biggest EV battery maker, they've had to suspend production at a key lithium mine in China. Expired license, apparently.
So that's sending ripples through lithium and battery stocks.
It is. Just shows how interconnected, maybe even fragile, these global supply chains can be.
Okay, so this push for domestic production, EVs, rare earths, it really highlights that whole U.S.-China tech situation, which brings us to that 15% fee on NVIDIA and AMD AI chip sales to China. What's the thinking behind this export tax, especially with Jensen Huang's lobbying efforts mentioned?
Well, it's interesting how the framing has shifted. Initially, it was pitched, as national security, but now some sources are suggesting it's seen more as a way to generate revenue. Plus, you have President Trump publicly calling the H20 chip the one sort of central to this obsolete.
Obsolete. So it muddies the waters a bit on the actual goal here. Is it security? Is it revenue? Is the tech even cutting edge, according to the administration?
Precisely. It raises questions about the real intent and maybe the effectiveness of these kinds of measures. And if we zoom out, Greg Ip's analysis in the journal connects these dots, suggesting the U.S. is moving towards what he calls state capitalism. How does that look in an American context? What examples are we seeing?
Well, the term they use is state capitalism with American characteristics. It's basically the government taking a more active hand in guiding private companies. Examples, you've got the reported pressure on Intel's CEO to resign, or Washington securing a golden share in the U.S. steel takeover by Nippon Steel. That gives the government veto power, essentially.
Well, golden share, right?
And then there's the president personally directing, they say, $1.5 trillion in investment pledges from trading partners. I mean, it's a definite step away from traditional free market ideas, isn't it?
It certainly seems like a significant shift.
Okay, let's pivot to another area where big promises met, complex realities. Affordable housing. We all remember Meta, Google, Apple pledging billions back in 2019 for Bay Area housing. It's 2025 now. How's that going?
Well, the results have been, let's say, limited so far. Meta, for example, has spent only a small fraction of its $1 billion pledge. And Google is reportedly looking at selling a key piece of land that was actually earmarked for housing development.
So not quite the impact originally envisioned. Why the shortfall? Is it just complexity?
It's definitely complex. These tech giants, despite, huge resources, seem to struggle with local politics, zoning laws, community pushback, things outside their usual tech domain. Urban development is a different beast entirely.
Right, so bringing this all back, what does this mean for you, the listener, on a practical level? Well, that push for domestic rare earth magnets, that could eventually impact the price and availability of electronics, maybe the EV you're considering buying. And Ford's affordable EV plan, obviously, aims to make that tech more accessible for you.
On the flip side, Those unfulfilled housing pledges by big tech, they contribute to the ongoing affordability crisis in major cities. That directly impacts your living costs, your economic mobility if you're in those areas.
Yeah.
These high-level corporate and government decisions, they do filter down. They shape your investment returns, the cost of goods, even job opportunities.
So as we see government influence growing in private business and these big corporate social promises coming under scrutiny, it really makes you think, how might these trends reshape economic opportunity, reshape market dynamics for you over the next, say, 10 years?
Yeah, consider the long-term effects. What does this evolving blend of state influence and corporate action mean for individual wealth building, for consumer choice, as these new economic models start to take hold?
Food for thought. Thank you for joining us for this deep dive.